Will AT&T cut their dividends this year? Let's talk about it. Hi, I'm Matt. On this channel, we talk about stocks, investing, and personal finance from the point of view of my own financial journey. And if you like this content, please tap that like button and subscribe. And in this week's portfolio update, we're going to talk about whether I think AT&T is going to cut their dividends this year or not. And stay to the end, because I'll answer the question I think you really want to ask. Now, obviously, I don't have a crystal ball, so I don't know for sure, but I think it's fun to, look at the data and form some opinions. So I made many videos in the past about AT&T, who they are as a company, why I'm bullish on them. I'm not going to go through all that in this video. I'll put the latest couple of videos in the description for your viewing pleasure. But in order to predict the future on AT&T as a dividend stock, let's evaluate it really quickly, just hitting the high notes as a dividend stock. So right now, as of this moment in time, I'm recording this on Wednesday. You'll be seeing this on Friday. It has a dividend yield of 6.77%. Now, that's a little high. Now, I do enjoy the amount of money I'm getting each quarter from AT&T, but you want dividend yields to be between 3 and 4%. That's a safe amount. Now, AT&T is a dividend aristocrat as of right now, which means it has been consistently giving out and raising dividends for the past 25 years. That establishes AT&T's history as a very, very strong and committed dividend player. So that's a win in my book. Now, although I'm using AT&T strictly for dividends and not as a growth play, when you're looking at a dividend stock to determine whether it's a good one or not, you do want to see some revenue growth year over year. For every single year, with the exception of 2020, which 2020 was a difficult year for anyone, I'm not mad, the revenue increases have been going up considerably year over year. So that is good. Looking at his cash flow, free cash flow is a very, very important thing in a company's ability to pay out dividends, because that's what AT&T uses to gauge its payout ratio. The free cash flow as of the end of 2020 has been pretty strong. Now, if you've been watching my AT&T videos for some time, you know what I'm about to say. And this is the biggest problem right now with AT&T is the balance sheet. Not the assets versus liabilities. That's looking pretty good. It's the debt. The debt has been going up year over year. And anyone who's been familiar with AT&T for any period of time knows that this debt is a problem. And as of the end of 2020, they have more debt than equity, which is a bad sign. As long as AT&T continues to perform financially well, the debt isn't a huge problem. The problem becomes more evident if the company starts going through some sort of financial hardship. If we take a look at their latest earnings report, at least their presentation, as of their fourth quarter, they have a payout ratio of about 49%. And as the full year, they have a payout ratio of 55%, which is not bad at all. Not bad whatsoever from a payout ratio perspective. Anything below 75% is considered good. So the company has ended the fourth quarter in the year, despite being weighted in debt, very financially stable. So from a financial aspect, they're very capable of paying off their dividends and continuing to pay their dividends this year, at least so far. So that was a very, very quick catch me up. So let's talk about the future, because that's what's important. So let's start with their outlook for this year. And this year, they expect consolidated revenue growth within the 1% range, which is nothing to write home about. It's not fantastic, but it does mean that they are growing in revenue. So any revenue growth is good revenue growth as far as dividend stocks go. Now, as I've said in previous videos, 2020 is not going to be the year for AT&T. 2021 is the year that AT&T sort of finds itself. And as long as macroeconomic conditions continue to improve, as far as reopenings and the pandemic and stuff, I think 2022 is going to be the year for AT&T to shine. Now, as far as their free cash flow, they're expecting that to be within the $26 billion range, with the full-year total dividend payout ratio in the high 50s, the high 50% range. So, in my opinion, as long as AT&T continues to perform over the next couple of quarters, in line or beating these estimates, I think AT&T is not going to have a problem at all continuing to pay out dividends, as long as AT&T meets or beats this. Now, this was their outlook at the end of fiscal year 2020. Since then, we've had some pretty promising updates. AT&T recently provided an update on their financial strategy for this year. Now, remember what I said, growth is a very, very powerful component as far as a company continuing to pay out the dividends. So, although this isn't a growth stock, this is probably not going to 2x or 3x, at least not anytime soon. Powerful growth is very, very necessary for a dividend stock. And the first bit of news is absolutely amazing. Now, a lot of people thought historically that AT&T's acquisition of Warner Media was a wasted acquisition like DirecTV. But I beg to differ. I strongly beg to differ. HBO Max has been kicking ass, especially in 2020. Theaters are still closed in a lot of places. Like, the only place you can watch feature, movies that, you have to go to a theater for, like, silver screen movies. The only place you can watch them, at least as of right now, is HBO Max. So HBO Max has got that locked in. By the end of 2025, they're expecting 120 to 150 HBO Max and HBO subscribers. That is up from 75 to 90 million projected in October 2019. Now, although this is a prediction for 2025, the fact that they're upping the numbers this much means they're doing pretty freaking well with HBO. AT&T also has plans this year to increase its fiber footprint by an additional 3 million customer locations across more than 90 metro areas. Yeah, AT&T is pretty serious about trying to grow. C-band spectrum deployment to begin this year. Now, I'm going to simplify all this. So basically, AT&T took out some more debt, which kind of sucks to fund this thing, but to simplify all this, this C-band spectrum, which AT&T came in second, they won the second biggest amount of bandwidth. This means that if AT&T deploys it correctly, AT&T could have the second best 5G network in the country. Now, regarding their debt, and I'm really glad they brought this up because I wanted to see them comment on this. At the end of year 2021, they're expecting a debt ratio target of 3.0. Anything below 3.0 is considered acceptable. And I don't know where they are now, but as long as they hit this, I think we'll be good. And they're expecting to have a 2024 debt ratio of 2.5x or lower. They also plan to use all cash flows after total dividends to pay down their debt. So they're very serious on that. And they're also going to suspend share buybacks, which is important. And as the CEO, John Stinky, said multiple times, over and over, on the conference call and on Investor Day, they are committed to sustaining the dividend at current levels and utilizing cash flow after dividends to reduce debt. Now, they already pay out the first quarter of dividends this year, and they very recently declared dividends, 52 cents for the second quarter of dividends. So yeah, AT&T is probably going to keep paying dividends throughout 2021. And if they make it throughout 2021, like I said, 2022, I expect them to shoot up in growth. And if that happens, we're pretty good on dividends for the long term. Now, let me answer the question I think you're going to ask next. Is AT&T going to actually raise their dividends this year? Now, that question is a little harder to answer. I obviously don't have a crystal ball, but, I mean, it's still fun to guess. And my opinion is probably. So the first thing we want to talk about is its status as a dividend aristocrat. Now, this is a status that AT&T is painfully aware that it has, and I don't think it wants to bear the psychological brunt of being disbarred from that list. So in order to retain its status as a dividend aristocrat, AT&T has until the fourth quarter of 2021 to increase its dividend. So as long as AT&T increases it at some point this year, AT&T will retain that status. And I don't think AT&T wants to lose that, because that's probably going to be a psychological blow to any current investor. If they don't announce that, I mean, I think a lot of people are going to sell their shares. Now, personally, me, I don't care that much whether they're a dividend aristocrat or not. I mean, the status isn't going to pay me. I mean, their dividends are going to pay me. But my opinion is that they are going to see how they perform throughout the year. And if they continue to meet or beat their estimates, I think they're going to raise the dividends on their last quarter, at the last possible second. But I could be wrong. So I guess the takeaway is that I'm pretty sure it's going to happen, but I mean, we're going to want to pay attention to AT&T's quarterly reports. As long as it meets or beats the revenue and EPS estimates, I'm pretty sure it's going to raise its dividends on the third or fourth quarter. Now, if it doesn't, then bye-bye dividend aristocrat status. The share price will probably drop, and I'll be happy to take the shares that you don't want. All right, now let's finish things off as usual by showing you my weekly portfolio update, and you will see I went up quite a bit. I got pretty goddamn crazy as far as putting in money to this account. So I think yesterday I put in 900, today I put in 1400. Yeah, I put in about 2,300 this week alone. This month was a good month as far as cash position. So because I'm in such a good cash position, I think I'm almost to the point where I can start, every week putting in a little bit of money into dividend positions because I want to get back into doing that. I want to get back and increase my dividend income, but I wanted my cash position to be to a point where I can do that, while also being able to take advantage of any dips in the market. Thankfully, there aren't any more positions I want to buy. I think I finally have all the stocks that I want. My Highland position is finally done. I added 500 more shares as it dropped to around 1067. And like I said, it is done. I will not add any more shares to Highland at all unless I see some more news that gives me some conviction in the stock. Highland, I'm still bullish on them for the long term, but they're not really good at PR or selling themselves or stuff like that. So right now, my plan is just to kick back and stay at my negative 20% and just see what happens. As a total equity, I have $47,879.75, and I am up by 34.70%. But anyways, take care, have a great day, and eat your vegetables.